PayPal is down not only 22% year to date, but we have also news of some insider selling of over 4 million. We're going to touch upon that. We're going to look at the performance of the company. As always, with the latest earnings that has dropped, we're going to look at their income statement, their top line revenue, as well as their bottom line net income growth. Looking at the company's safety, their total cash versus their total debt. We'll also see whether or not the industry as a whole has been performing badly in their performance over the last 5 years. We'll also sneak and see what the institution's doing, if they are buying or selling this company. And we will take a closer look at this large insider selling and who this person is. And we'll also look at some very important financial metrics for PayPal and their growth over the last few years, as well as looking at their earnings. And as always, we will run them through our stock valuation model, getting to our intrinsic value and acceptable buy price given that investor margin of safety. Now, year to date, down 21.5%, absolutely hammered, right there towards the 52-week low. It doesn't currently offer a dividend, and for those who have been holding it over the last 10 years, well, as you can see, there has been effectively no real growth, although you would be sitting at around a 35, 38 average from 2015. Now, we do see it did peak at around $308 quite some time ago, so is this a company that is going to grow and overextend their all-time high? And can we effectively see them pay a yield over the next few years? Well, in terms of their latest earnings, how have they performed? As always, top line 3 to 7% is what we are after for a company as a minimum. $15.5 billion reported in 2018. 29 billion on their trailing 12 months, with 27.5 billion reported in 2022. So it does look like there has been some very nice growth, and we are expecting growth again into 2023. On a more granular level, what is really good to see is that increased growth year on year. There are no inconsistencies to their top line. And when we take a look at their bottom line, 2 billion reported of net income in 2018, 2.4 billion in 2022, so it has increased by around 20%, and we see the trailing 12 months showing some nice signs that there will be some very nice growth on the bottom line for PayPal in 2023. On a more granular level, though, we do see an increase all the way to effectively 2020 before remaining fairly flat into 21, and then we see a decrease in 2022. So yes, bottom line has increased, but there has been some inconsistencies. But overall, top line and bottom line have increased over the last 5 years, and we'll shortly look at the last 10 years growth percentage-wise too. Quick balance sheet health check, total cash versus total debt, 9.1 billion of cash sitting on the balance sheet and short-term investments in 2018. Latest quarterly report, 11.5 billion, so it has increased over the last 5 years. Positive to see, a nice cash position, but numerically and directionally, how does that compare to their total debt? Well, that has gone from around 2 billion to 11.2 billion, so yes, their total debt has in fact increased significantly, over 5 times growth, but they do also have quite a large cash position, so I would say this is a fairly strong balance sheet just off that basis. Now, very quickly, companies in the transaction payments and processing services industry on a total return. Now, what this effectively shows is that PayPal has been the worst performing year to date, but we can also see for the industry, the majority of them this year have had negative returns, with just FI and Global Payments Network showing a positive return. Over the last 5 years, when we extend that, we still see PayPal as one of the worst performers with FIS, and we can see half of performers down, whereas the other half showing positive returns. But do bear in mind, as always, past performance is never an indicator for future. Now, institutions, there is around 68% institutional ownerships. 11 billion of shares have been sold over the last 12 months, although we note nearly 3 times as much has been bought in the same period, around 28 billion worth. And a very large amount bought in Q2 of 23 by the institutions. Although do note in Q3 there was a little bit more selling than buying, and we see the same shown in Q1 of the same year. So always do take what you see with the institutions as a pinch of salt, and always do your own due diligence, never copying what they do. Now, in terms of insider ownership, it isn't the greatest at 0.14%, but we do see in Q4 of this year, so very, very recently, a 4.46 million sell. So it is always interesting to see why exactly companies are buying or selling their shares and who effectively are these people. So what we see here is the insider, Jonathan Albach, although I probably butchered the name, We do see a sale of 65,000 shares, and this is around 3.6 million worth, so that is quite significant. And we see Peggy EVP and selling around 15,000 shares, slightly lower but still quite a significant amount of 851 million. So overall, in fact, 1,000, apologies. So around 4.5 million worth sold very, very recently. We are talking in the last few days. So that is quite interesting. Although personally, there are a lot of reasons why investors or insiders do sell stocks. It is always better to see that they are buying because it means they have a lot of faith in the company, but they could be selling for a ton of reasons, and we can take a look into that. Now, in terms of their latest quarter, how have they performed? Well, actually, it was very positive. It was a beat on both their top line revenue, as we can see here, by around 400 million, a nice 0.5% surprise. They also beat on the earnings per share by around 7 cents, reporting $1.30, a nice 5.78% surprise. Now, if we do a quick analysis of Q3 23 versus Q3 22, they did beat on the top line by 8.4%. That is nice to see, although their bottom line and their bottom line margin both suffered, as well as the earnings per share. But we can see here their operating income slightly higher. So a bit mixed there for PayPal. Their top line is increasing, but they do need to work on that bottom line to ensure that it can continue to increase year on year. So something just to consider. Now, jumping into their metrics, so just to let you know, they are a large cap company. 62 billion is the current market cap. Now, in terms of free cash flow per share, we like to see this increasing year on year. 132 in 2013, 443 in 2022. So nice to see the growth year on year. It isn't very consistent, but over the long term it is increasing, with the next 12 months expected to increase again. So that is positive to see as an investor. Now, sales growth, this is one area that a lot of investors do clash. Some say that they do see this growth slowing. Some say that they see it continuing. Up to now, it has had double-digit growth year on year. We do see 2022 where it did slow down slightly to 8%, but that's still very, very strong. If they do manage to get it back up to the double digits, then this could be a very undervalued company that you look back in 2024-25, hitting yourself on the head as to why you haven't invested in it. Now, numerically, how does this translate? Well, 6.73 billion worth of sales in 2013, 27.5 in 2022. Very nice consistent growth over the last 10 years. This is something I really like to see when investing in a company. Shares outstanding, they do buy back shares. We see it go from 1.22 to 1.16 in 2022. So over the period, they have bought effectively 600 million worth of shares. Maybe not at the quickest rate and not as consistent as you would like to see, but they are still returning excess cash to investor pockets. ROIC, at least that 10% or more that I like to see from a company. It does give me faith in their ability to effectively allocate their capital, and it's always great to see when it's very consistent year on year, so that does give me faith in management. Likewise, very nice operating margin, around that 16% as a minimum we look for, and well above the 7% on the free cash flow margin. It may not be the most consistent on the free cash flow margin, but it is still showing some strong numbers in my opinion. And the net debt to EBITDA, now this signals the number of years it would take the company to pay off all of their debt net of cash on hand. Very, very strong in my opinion. It wouldn't even take them point or even half a year to pay it all off. 0.1 year is how much it would in 2022, and in 2023 it wouldn't even take them 1 year based on their estimates. So it does show they do have a very strong balance sheet. Now, when we jump into the stock valuation model, and as always, if you enjoy the content, values being provided, do smash that like button, hit the subscribe and bell so you are continually notified of these videos as they drop. And if you want to grab a copy of the intrinsic value calculator to get to the acceptable buy price of companies in your own portfolio or on your watch list, then do click on that pinned comment below. Jumping into the first model, Graham's Valuation, we have the stock ticker PayPal, PYPL, earnings per share, growth rate per analyst estimates, and that current yield on AAA corporate bonds, give an intrinsic value of $73. Now, when we take a look at the current price for PayPal, what we see, that is some nice upside to the current value, but it is still within the 52-week range, showing some signs of undervaluation in the current market. Do remember, though, we're not looking at any of these models in isolation, and we will be drawing our conclusions towards the end. Multiple valuation model, companies in the similar sector and size that we analysed, we have their stock price, EPS, P multiple, average multiplied by the earnings per share of PayPal to get a multiples valuation of $136. Now, that is still below the all-time high that we saw, but it is above the 52-week high, showing some strong signs of undervaluation in the current market for PayPal holdings. Now, typically what would be the third model, the DDM model, however, given PayPal don't currently pay dividends, this one will be irrelevant. But do drop your thoughts in the comments below if you believe PayPal should start paying dividends or if you believe it will in the near future. Now, the third model we're using today is the DCF discounted cash flow model with our free cash flows year on year. We have the average growth rate of 22.5%. Forward looking, analysts estimating around 4 to 6%, so I have gone ultra conservative. With the discount rate, we get the present value of future free cash flows and terminal value. Add together with the cash, subtract total debt, get to the equity value, divide by shares outstanding to give a DCF price of around $86. Now that is pretty much at that 52-week high, again showing some strong signs of undervaluation for PayPal in the current market. Now, the intrinsic value, as always, is purely the average of the models we've gone through. And don't forget, if you're enjoying the content values being provided, do smash that like button, hit the subscribe and bell to be continually notified of these videos as they drop to your doorstep on a regular basis. Now, the current price sitting at $58 with an intrinsic value of $98. Starting off, margin of safety of 10%. Now, it would be a buy up to $88. We personally use 10% if we believe it has a wide moat, strong financial metrics, good forward-looking data. Now, if we extend that 10% to 20%, it's still a buy up to $78. At 30%, it's still a buy up to $68. And if we squeeze it to 40%, again, pretty much at the current price. So based on our estimates, you are locking in around a 40% margin of safety. Now, what do Wall Street say? Well, they believe the share price to go up. It does look to have some very strong upside, slightly lower than our intrinsic value, but they do see this as a strong buy now. As always though, do let me know your thoughts in the comments below. Is PayPal one you've started to add to? Is it one that you added to earlier but are considering again? Or for whatever reason, do you believe that the insider selling has really put you off? Or do you also agree that there are times when insider trading has little to do with the company? But let me know your thoughts in the comments below. As always, smash the like button if you've enjoyed the content. Do subscribe and hit the bell so you are getting access to these videos as they drop regularly every day. And finally, if you want to grab a copy of the valuation model to get to the intrinsic value and acceptable buy price, whether it's companies in your portfolio or on your watch list, then do hit that pinned comment. As always, have a great day. Catch you all on the next episode and take care.